Give thanks and give smarter. This Thanksgiving week, we're spotlighting donor-advised funds, a tax-powered way to give more to the causes you love. Tune in and find out how to make your generosity have a bigger impact.
Your creative genius deserves the same precision behind the numbers.
Welcome to Let's Get Fiscal, hosted by Anastasia, Maisha, and Danielle.
Part of the women-led team at Coterie Tax.
From smart tax moves to cash flow strategy,
We decode everything it takes to run a thriving, creative business.
So you can scale with confidence and sleep easy at night.
Press play and let's grow your business.
Hi, welcome to the Let's Get Fiscal podcast. I'm Maisha and I'm here with Anastasia. We're going to talk about more fun stuff today. What do you got going on?
Well, for this week, I wanted to choose something kind of like a lighter topic, but it's also a good tax strategy that if you are interested, you need to do before the end of the year. And
Okay.
I thought it was really topical. It's called a donor advised fund.
Okay, fun. Is there a short version of that? Because that's a mouthful. Yeah.
We normally call it a DAF. or
Okay,
like
okay.
DAF.
Okay,
and that
cool.
stands for that donor advised fund.
Okay, so what is a DAF?
So a DAF, it's a donor advised fund.
Yes.
So basically you make a donation to a specific charity
Okay.
and they put those funds into a special account that's just for you. And then periodically you can tell that charity, hey, I would like you to distribute X amount to this charity.
Oh, okay. That's interesting. So why? Why is it like that? What is why?
the benefit?
Yeah, what is the benefit? Why give the money to just hold out to then tell them that you want to use it instead of just giving it to them when you want to make the change or whatever? Yeah, sorry. That was a weird way of asking why.
So one of the big things about charitable giving and using it in taxes is a lot of people say, oh, you can use it as a deduction on your taxes. And really it comes into play when you are itemizing.
Oh,
So
okay.
if you take the standard deduction, then those charitable donations don't count towards anything. If you itemize, then you can, but you also have to have other things
to be part of the,
right.
yeah.
Maybe it's your property taxes, your state income taxes, the interest on your mortgage, maybe some medical expenses, and then you can add in this charitable giving. But there are cases where the charitable giving year over year maybe isn't enough for you to pass that threshold for standard versus itemized deductions. But what the donor advised fund, it allows you to, we call it bunching, where you are able to take multiple years worth of your donations.
Oh, okay.
And then fund it. So for example, right now the standard deduction is $15,000.
Yeah.
Let's say you donate $5,000 to, Planned Parenthood or the Humane Society every single year. Because it's only $5,000 and the standard deduction is $15,000, that donation wouldn't count towards anything.
Yeah.
But if you take 4 years worth of your donations and you put it into the donor advised funds, in that year that you make that initial contribution of $20,000, you get to take that full $20,000 deduction, which is now more than the standard deduction, and you're able to apply it to your taxes and get, your taxable income down.
Okay, that's really cool.
And then because it's already in the fund, you can, over the next 4 years, provide that same exact $5,000 donation that you were before. But now you're saving, 20-30% on that.
That's amazing.
$20,000, which allows you to have even more money to be able to give. So what it's really allowing you to do is provide this super donation.
Yeah.
And you get the deduction in the year that you're putting all of the money into the account. And then you don't have to rush to find a person.
Yeah. Okay.
Or an organization
to support.
To.
Yeah.
You can do half one year, half the next year. So you can really spread it out. But because you're kind of giving up control of
those
the money
funds.
when you put it into the account, you're able to take the full deduction in that year.
That's really cool. How are there like deadlines that you need to like donate to this fund by a certain day? Like how does that work?
Yes. So it all has to happen before the end of the year.
Okay.
But that's another great thing is because at the end of the year when, let's say it's December 15th, you're not really sure, you don't want to go through this whole list of all of these charities, or maybe they don't need it now because it's not their fundraising season, what have you. You can put it into the donor advised fund and then go and enjoy your holidays and come back and then sit down and really decide where you want these funds to be distributed. But because you did it before the end of the year, you did it in a lump sum, you'll be able to include that on your tax return.
That is really cool.
So, and like I said, you're taking a donation that you would already normally do, but now you're deducting it on your taxes. So depending on your tax bracket, that can be, 22, 24% that you're saving on that. And then you're able to fund your, put the money into your fund. All
That's
of those
amazing.
Savings.
Yeah. Do you have to be very like specific when you're looking for a type of account to do this fund with? Is it like a specific type of like companies that do it, or is it just you can do donor advisor fund in Google and then find lots of different options? Okay.
Right.
Okay.
There are definitely a lot of different options. I mean, there's even Fidelity has one. So there's a lot of different things. What I love to do is recommend one of the community-based organizations that's in your area. Because a lot of times, especially let's say you want to, normally you have to put $25,000 into the donor advised fund.
Okay.
And maybe you don't necessarily know all of the organizations that could use those funds or how they would use those funds. So that community partner will really help because you can tell them what your values are and they'll be able to recommend some of the different charities that maybe you don't necessarily know about, but they really heavily align with what your values are.
That's awesome. Okay, cool. I like that.
So, I mean, I think it's really cute. I've even seen, some of the higher income earners, they have a family donor advised fund, and then they have like the grandkids come in and they learn about a charity and they pick which one they wanted to go to and things like that. So there's definitely other ways that you can get your family and your children involved in this donor advised fund. But like I said, a lot of the benefit is being able to take your donation that maybe you would have made over the next couple of years and get the benefit all in that current year that you make that contribution. Or like I said, if you have like a windfall income 1 year and you're not really sure where you want it to go, but you do know that you want to
donate it
to the community, then you can put it in this donor advised fund. You can get the tax incentive and then also rely on that community partner to help you.
And take your time with like looking and making sure that you're choosing the ones that you really want to support. No, I think that's amazing. Okay, cool.
So I love donor advised funds, especially if you are looking towards giving and you're looking for different avenues, because this definitely amplifies your giving and your abilities. But like I said, you get into a habit where you're doing a certain thing every single year and everybody's telling you can deduct it, which you can, but it doesn't necessarily mean that it's more beneficial over the standard deduction. So if you really want to make sure that you're getting the best bang for your buck, sometimes doing it this way
in
or
a lump sum.
We also have that time value of money. If you save more on taxes today, then, you can invest those funds and then you could, increase the value that way. So it's a really great way to be able to continue all of that giving, really impact the different organizations that are important to you. And then, like I said, discover maybe a few more that share your values that you'll be able to benefit.
Yeah, no, that's fantastic. I love that. I had no idea about any of it. So it's really cool. Yeah.
I know. And that's what I say, like, high income earners, you have to be very strategic and really make sure that you are optimizing the way that you are using every single dollar, because if you are using it to its best potential, then whatever your goals are, you're able to do them faster and move them further. So this is a really great way to be able to have that happen with your values and kind of how you want to impact the world around you.
It's so heartfelt. I like that.
So this Thanksgiving, when you're thinking about the things that are important to you and your community
Giving back
at large, this is a really great way for you to be able to do all of those things, but make a bigger impact and kind of help both sides. So if you have any questions, feel free to leave a comment below or send us an email, and we look forward to seeing you again.
Happy holidays.
That's a wrap on Let's Get Fiscal. Ready to stop guessing and start saving?
Click the link in the show notes.
Grab your consult and let's make your business work for you,
Not the other way around. You've got this.